Imagine paying $250 more for a new iPhone or paying $20,000 more for your dream home. Sounds wild, right? Well, that's the cost of tariffs. In this video, I will be explaining what tariffs are and where they're hitting the hardest, and why your wallet and the housing market may take the biggest hit. Hello everyone, welcome back to another video. If you're wondering why prices are suddenly jumping or why your realtor friend seems stressed, well, this one's for you. So let's get to the board. Like I mentioned, we're going to be talking about what tariffs are. So essentially, tariffs are taxes imposed on imports, goods that are coming in from foreign countries into this country that consumers are buying. That is the basic definition of what tariffs are: when a country imposes taxes on that foreign good. They're not called taxes, but I'm using that term essentially to understand what it is. So taxes imposed on imports coming in from foreign countries. Just think of it as toll. When you go to the border, you pay toll. That's what tariffs are. Now, why would the US impose tariffs or these so-called taxes on foreign goods that are coming in? Well, there's three main reasons. Number one reason is they want to protect the local businesses. So essentially, if we're putting taxes or tariffs on goods that are coming in, then goods from other countries may be cheaper than goods that are manufactured here. So if we put a tariff on those goods, now those goods get expensive. Well, local businesses in this country benefit from that. Local production benefits from that because we can keep businesses here locally, domestically, instead of buying goods that are coming from another country. Number two reason is obviously to raise revenue when all these goods are coming in from, say, China, India, Thailand, Canada, Mexico. When we put a tariff on it, the goal is, you like how I'm doing quotations here, is to increase our revenue for the government. So if we put a tariff or a tax on these goods, we make more money. The third goal here is, which is I think what we're really doing here in these trade talks, is adding pressure leverage to these trade talks. So when we put on a tariff on this country, and now that country is under financial burden because their gross domestic product comes to America, and now we put a tariff on it, well, now we can bring them to the talking table to negotiate either more tariffs, less tariffs. Some trades have a trading system going on with them. You get the point. So that's the third point. Now, before we jump in and look at the 2025 tariff landscape, let's look at what's transpired in the last few months regarding tariff talks and what is to come. So in February 2025, initial strike happened when Trump imposes a 25% tax on Canada, Mexico, and a 10% initial China tax. Then in March 25, retaliation starts to go on between America and Canada. Then in April 2025, it escalates with the US tariffs on China spiking up to 145%, and China retaliating with a huge burden or huge stop, a restriction on rare minerals. Then in May 2025, Geneva talks happen where US and China come to a truce and tariffs reduced to 30%. In June 2025, this year, just the first week of this month, the US increased steel and aluminum tariffs to 50%. And in July 2025, which is coming next month, we're going to hear this around July 9th, what happens, but US is threatening the European Union to increase tariffs up to 50%. Now let's look at the tariff landscape and see what kind of tariffs are hitting different countries. So China is hit with a 30% tariff on a majority of goods that are coming in. Canada and Mexico are hit with an overall 25% tariff from goods that are coming in from Canada and Mexico. 10% on energy when it comes to Canada. That's primarily the heavy crude oil. I'll talk about that in detail in a bit. South Korea hit with a 25% tariff. Japan, 24% tariff. And then I just said this on the board right now. Steel plus aluminum, 50% tariff on any steel or aluminum coming into this country. There are other Asian countries that I have not thrown on the board here, but to keep this simple and effective, these are the main countries that will have a heavy impact on consumer cost and spending here in the country, so I kept it limited. Moving forward now, let's look at who will pay if these tariffs continue to go on and this whole tariff situation trade war goes. So as you know this probably already, we're going to be the ones that are affected by this most. Consumer pays for this. When a tariff goes on China or Canada, it's impacting those private or domestic companies in those countries that are sending us products here. So when their cost goes up, they defer that cost over to the consumer. So you expect consumer spending to go up or cost to go up. Economists are predicting about a $2,500 more cost per household, which is the largest tax increase since 1993. A lot of economists are also predicting the GDP to decline about 0.7%, almost a percent there, because as you know, these costs of goods go up, they're not just direct products that we're buying, there's also products that small or medium-sized businesses or even large companies here get from China or Canada or Mexico. And we're all connected in this whole thing. So when prices of goods go up, consumers start to spend less. We're also producing less because now consumers are buying less. We're trying to keep our costs low. So that impacts the overall gross domestic product of the country. And that can happen if this whole thing continues the way it's going right now. Now, to the next point, cost of goods. Now, you're probably wondering, well, what's going to really get expensive if this whole thing continues? Well, number one, I mentioned this earlier in the beginning of my video, iPhone may get more expensive. The company that produces iPhone is Apple, which is here in Cupertino, California. The R&D is done here, but the production, the manufacturing is done in Asian countries, primarily China. So if those imports that are coming in have a tariff on them, you can expect the iPhone to go up to about $250 to $300. My gamer friends here that are watching this video, or my techies, you're not going to like this at all. PS5, PlayStation 5 may jump up to $400 more than where it's at right now. Overall, cars. So cars are manufactured obviously here in the US, they're manufactured in Canada, they're manufactured in Mexico, and a lot of cars come from the European Union. Germany's part of that, right? So if there's BMWs coming in from that part of the world and we have almost a 50% or 30% tariff on them, we'll expect for those car prices to defer those costs to the consumer. So I don't have a set number on that, but average, you can expect car prices to go up 6,000, whereas car prices, as a lot of you know right now, it's pretty good to go out there and buy a car because car prices had come down. Insurance has been going up, but car prices had come down. Well, this whole supply-demand stuff that's happening right now with the tariffs, car prices may go up. Avocados. So Mexico is 90%. So let me rephrase that. 90% of avocados that are consumed here in the United States, they all come from Mexico. So if we have a 25% tariff going on, expect those avocados to go up. So I would suggest, planting an avocado tree, although it might take you 3-4 years to reap the benefits there. But that might be a smart move to make. Now, if you're in the Midwest and other parts of the world where you can't grow avocados, you might just be out of luck. Moving forward, overall grocery costs, gas. I'm going to get dive deeper into gas, why gas is going to go up. Clothing is also going to go up because there is a tariff on Cambodia and Bangladesh, where a lot of the apparel and clothing is not designed, but manufactured, just like China manufactures a lot of the iPhones. These countries knit, machine, apparel production happens in Cambodia and Bangladesh. Now here's the irony. America is considered energy independent, but then it really isn't. So why do I say that? Because back to my point, like I mentioned, that we've imposed only a 10% energy tariff instead of an overall 25% tariff on Canada, because most of the heavy crude oil that we refine here in the US to produce gas and petrochemicals like plastics comes from Canada. And our refineries here in the US are built to process heavy crude oil and not the high quality light crude oil that's produced in America. Mind blown. Like, you're probably wondering why is that? Because that's how the US is. We're a capitalistic country. We want to make sure we reserve our mines that have crude oil. So we've always been getting crude oil from Canada. So most of the refineries here process heavy crude oil. So if we put increased tariffs on Canadian crude oil that comes in, our energy costs can go up and we can have a direct impact on our wallet when we go to the gas pump on the gas stations. So what the US does is the US takes our light crude oil and sells it for a premium price and buys this heavy crude oil from Canada at a 15% cost reduction. And that little margin there, we're able to deliver competitive prices. Now let's look at the retaliation that a lot of countries are doing, primarily China. Well, you're gonna have some kind of repercussion if we're putting these heavy levies and trying to leverage our power because we're the largest consumer in the world. Well, there are countries out there that have a lot of leverage. So let's look at this on the board. China, the biggest restriction that China is doing that is having a huge impact on a lot of different markets, especially like electronics, auto, semiconductor, you name it, is because China is just put a restriction on its rare minerals. It mines and processes 7 rare minerals. And here's the crazy part. 70% of these rare minerals that go into the semiconductor, auto industry, all these things that I just named, are actually mined from China. And here's the crazier part. 90% of the refineries to process these rare minerals are also in China. Let's look at these rare minerals and what markets they're directly impacting. First, you have samarium, which is used in magnets and electronics, restricted. You have gadolinium, which goes into MRI contrast, nuclear tech. Then you have terbium, sorry, I can't pronounce these names, that goes into green phosphorus fuel cells. I don't know what green phosphorus is, but you guys can Google that. Then there is dysprosium. It goes into your EV electronic cars and your wind turbines. Then there's yttrium, lasers and jet engines. Then there's scandium, aerospace alloys. And then you have lutetium, medical imaging catalysts. So as you just saw, those rare minerals are directly impacting the electronic vehicle industry, overall electronics, semiconductors, and aerospace and defense, because these minerals go into the production of these very things. And right now we haven't seen the full impact of this, but if this restriction continues, there's going to be a huge shortage of all this supply that's coming in because China controls 70% of the production. Now let's see how all of this impacts the housing market. So as I mentioned earlier, that 50% steel and aluminum tariff is huge because the US is the 4th largest producer. China, again, is one of the largest producers of a lot of aluminum and steel in the world. So if we have these tariffs going on that are coming in on steel and aluminum from other parts of the world, we just don't have the infrastructure to meet our local domestic companies' demand that need this steel and aluminum. And primarily, the real estate and housing market industry needs this. So expect to see a 4 to 5% increase that a lot of economists are predicting in cost of construction on new homes because the steel framing and all that good stuff, it needs those minerals. Appliances, cabinets, fixtures that go into these homes and new constructions are also going to see a surge in pricing because all this is chaos that's happening is going to impact the supply chain. There's going to be back orders. People are going to be charging premiums, and all those costs are going to get deferred, sorry guys, to the consumer. Moving forward, supply chain delays, which I just kind of covered right now. There are going to be some supply chain delays if the trade wars just keep going and there's no sit down or a talk or a negotiation or a handshake. Then we might go back to what was happening during the COVID times where everything was just paused. So expect to see huge supply chain issues. Regional impact on small builders. So not everyone's your KB Homes or your Pulte. There are small builders that are in each city or each town, in each county that, they don't have the big pockets and they've built homes or now they're building more homes. They bought the lots already. So if all of their costs of goods have gone up that are going to go into construction, well, that's going to cause a lot of issues here domestically with home prices going up and also a lot of these builders taking that impact. So this might slow down construction, and that's a whole different topic right now. So if you guys are wondering, well, what's going on with the housing market? It's kind of shifting into the buyer's market. If you want to know more about that, check out this video. But stay here, let's talk about this. So it may impact what's happening in this country when it comes to small builders. They might slow down construction, and that might impact the supply and demand here when it comes to newly constructed homes. Well, what does all this mean to you? Well, you definitely can expect higher prices for gas, groceries, electronics, and maybe even homes. But that's something that we can talk on a different video, because right now there's very little demand. Demand has gone down and there's a lot of surplus of inventory on the market of existing homes, but new homes may see a surge in pricing. If this chaos continues and inflation starts to rise up again, watch the market very closely, because the Fed may start to increase rates even further. Price volatility is real, guys. There's a lot of things going up and down. This is happening all across the market. And particularly in the housing market, on the short term, sellers may have an upper hand in different markets, but on the long term, buyer demand may crumble. There's one thing that all of us can agree on, is that we need each other. Us being the powerhouse that we are here in the US, we need fuel to power our powerhouse, literally and metaphorically speaking. So it's very important that we continue. There's a term in science called a symbiotic relationship, which is when two species interact with each other on a long term and both of those species benefit. So you get my point here. We need to communicate, talk, and have open dialogue and discussions, because if we continue the way we're going, then all this will really impact you and me, the consumer. I got a question for you. What are your thoughts on these trade policies? Do you think these trade policies help US businesses and consumers? Let me know in the comments below. And if you've learned something new today, hit subscribe for future market deep dives. Until next time, this is Karan Singh.